Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
We're going to continue to look at those broad topics presented by CSEC for the 2021 examinations. In a previous lesson, I did a part one. If you have missed that, then the link will be in the description below. So you can use that to review what was done for number 1, 2, 3, and 4. So the focus will be on the other 5 broad topics in this part 2 that I will be doing. So we're going to start with the control systems. And when we talk about the control systems, you know, you're talking about your suspense account, your control account, your bank reconciliation account, and the errors, of course, right? So number 1, explain the uses of the control systems. You need to know the need for control system. What are the uses of that? Number 2, outline the 3 most commonly used control systems: suspense account, control accounts, and bank reconciliation statements that I've mentioned earlier. Distinguish between those errors which affect and those which do not affect the trial balance. So we have errors that do not affect the trial balance, no matter what. Once these errors occur, then of course your trial balance will still be balanced, right? So both your debit and your credit columns will still be equal to each other. So we're talking about errors like reversal of entry. We're talking about errors like errors of principle, errors of commission, omission, right? And there are others. So those are the errors that do not affect your trial balance. But the ones that affect the trial balance, you'll find that either your debit or your credit is short. And once that is short, you know, you're going to use a temporary account, the suspense, to go through the process to find the errors and correct those, right? So you need to know how to distinguish between those errors and know how to identify them too, because they can give you a list of items and ask you which error is that. And of course, you need to know how to correct those errors. So number 4, prepare journal entries for the correction of errors. And in doing that, you'll need to know which account you're going to debit and which one you're going to credit in order to correct the errors, right? What entry do you need to make to correct that? How much you need to put in the amount column in order to correct that. So you need to know all of these things. Explain the need for a suspense account. And once your debit column is not equal to your credit column for the trial balance, you're going to need a suspense account. And remember, in that suspense account, you're going to filter the difference within the trial balance in your suspense account. If it is a debit column, you're going to put that difference on the debit side. If it is your credit column, you're going to put the difference on the credit side of the suspense account, and then you go through the process in finding and correcting those errors. Number 6, construct a suspense account. Number 7, construct a statement of revised profit after correction of errors. And people tend to forget to do this, right? If your teacher leave this out, you need to ensure that you find a way to understand how to do this. Basically, if it is that your expenses were overstated, what effect would that have on your profit? So in correcting that, if the expense is overstated, you know that is going to cause a reduction in your profit generated by doing your income statement. So if it is that it is overstated, your profit would have been understated. So to correct that, you'd have to add the amount, the overstated amount of the expense back to your profit so you can get the actual value of your profit. And there are other things that will affect your profit, your calculation of your profit. And bear in mind that these items, based on correcting the error, if the item does not relate to calculating your profit, that will not be included in the statement of revised profit. Explain the purposes of control accounts and how they are prepared. And so basically looking at the uses, why persons prepare control account. There's a lesson for that on my channel, so you can view that just the same. Identify the sources of information for entries made in control accounts, construct sales and purchases ledger control account. You know, the other term for sales ledger control is debtors ledger control. So you definitely are using that principle of preparing your debtors account in order to do your sales ledger control. But what you're doing is picking up the total. That is why control account is also referred to as total accounts. Explain the significance of the balances on control account. And control account, they can either carry debit balances or credit balances. So you need to know why they have that particular balance. In continuing, number 12, identify items that will result in differences between your cash book and your bank statement. This can be a theory question, right? And with that theory, they may ask you to define these items, or how do you identify them? And they may give you, like, for example, a transaction. They may say that the transaction listed on the date, a particular date, you are to state what type of item it is, if it is like an unpresented check, a late lodgement, etc. And they may ask you too, why is that check dishonored? So as simple as that, you might not expect that question to be in this section, but it might just appear in it. And definitely you need to know how to construct a bank reconciliation statement using the adjustment cash book balance. Now, there are two formats in preparing your bank reconciliation account. One, you can start with updated cash book, and the other is that you may start with your bank statement balance. Based on the question, they may ask you to do a specific one, but there are cases where they don't ask you to do a specific one. So you may be given like a theory question then, and all you have available is the updated cash book balance. Which format are you going to use? You need to know there and then as the candidate that you're to use updated cash book balance, because the bank statement balance is not available. Vice versa, if your bank statement balance is available and you don't know your updated cash book balance because there wasn't any need for you to update the cash book, then of course you would have to use that format that starts with your bank statement balance. Another thing that you have to look out for in doing your bank reconciliation statement is if there is an overdrawn balance in whether your cash book or your bank statement. So basically there is an overdrawn balance in your bank account. You need to know how to treat that in your bank reconciliation statement. We're looking at bank reconciliation statement. Another ways the examiners can present the question is to give you a cash book, and out of preparing the cash book, another part of that question can be for you to prepare the bank reconciliation statement based on some additional information that is prepared, that is presented. So those are some tips, and those are the items that you should look out for as it relates to control systems. Remember, control systems is not just control account. Control systems also take into consideration errors, suspense, and bank reconciliation statement. So that is for item 5. We're now on to item 6. Item 6, and we're going to take a look at the syllabus for that to find out exactly what is required. So here we are. The preparation and analysis of financial statements of the sole trader, right? And you know, for sure, before I even go down into this, and we'll talk about preparing the financial statements for the sole trader, we're looking at the income statement, which is your trading profit and loss account, and the statement of financial position, which is your balance sheet. But the things that might come out in it, explain the purpose of preparing financial statements. You need to know that. Identify the components of the financial statement. So trading profit and loss account and balance sheet, as indicated earlier, they can ask you to prepare an income statement. The income statement is the trading profit and loss account. And we know the purpose of the trading profit and loss account is to ascertain your net profit or your net income, because they can use the term income. And for you to do your statement of financial position, which is your balance sheet. So you're seeing the asterisk beside the objective at number 3, and it means that you need to know how to prepare it, right? So basically, income statements for sole trader include the adjustments. So you can't run away from the adjustments. So your accruals, your prepayments, how do you treat that? You know the accruals you add, the prepayments you subtract, right? The bad debt is an expense. But if the bad debt might just come down in the additional information, how do you treat that? Once it comes in the additional information, it means that you have to adjust in your income statement for your bad debt. Likewise, when you go over to your balance sheet, you would have to reduce your debtors of that value for the bad debt. Things like your return inwards, you need to know the alternative term, return outwards, carriage inwards, and carriage is transportation. So you might say transportation in instead of carriage inwards, and transportation out instead of carriage outwards. And your closing inventory, basically your closing stock. So you need to know how to treat these when you're preparing your income statement. Prepare classified balance sheet. And of course, when you say classified, you know that they're looking out for your working capital. And the next term for working capital is your net current assets. And of course, in doing the balance sheet, remember, you're showing the accounting equation. Remember, you're showing your assets. So you'll have to show your non-current assets. Then you put in your current assets minus your liabilities, and that would be equal to your finance section, which is your capital section, where you try to ascertain your closing capital. So remember that that is the format of the balance sheet that you are preparing. In continuing, number 5, explain the significance of the working capital for the operation of a business. Number 6, use ratios to determine the performance, the profitability of the business. And apart from saying the profitability, there are other ratios that you may be asked to calculate. And these are your efficiency ratio and your liquidity ratio. So there are 3 categories of ratio that are looked at in the CSEC syllabus. Your liquidity ratio, so we're talking about your current asset, your acid test, which is known as your quick test ratio. As simple as working capital is, they could ask you to calculate your working capital ratio, even though it is already in your balance sheet. In addition to that, your profitability ratio, looking at your gross profit percentage, your net profit percentage. And if you're in exam and they ask to calculate the profit margin, they did not indicate whether it is net profit or gross profit. The best one to use is the net profit. So that is the one that you would use. Your efficiency ratio, you're looking at your stock turnover, etc. Right? Number 8, show the effect of net profit or loss on capital. Now, in your balance sheet, please note that your net profit, your net income basically increases your capital, while the loss will decrease your capital. That is the effect that they're talking about. And they may ask you to show the calculation too. Make recommendations about a business based on ratio analysis. So you know, even though you're saying that your business is making a profit of probably $500,000, it may be a case that you're making profit, but you're not making full use of the money. The business may be too liquid, may have too much cash line idle, etc. So all they're asking you to do is to make recommendations on how to improve on the performance of the business. Like, for example, your net profit margin may be low. What can you do to improve your net profit? One thing that you can do is to increase the volume of sales, or you could even try to decrease the value of the expenses that the business generates. So therefore, those are like some recommendations then in how you can improve on the business performance. But basically, it is based on the analysis, based on the calculation of the results of those ratios that you were asked to prepare. And they can give you some ratio and said they could give you say 2 categories of ratio. You don't know which category because they don't separate them, but they ask you to comment on the liquidity position of the business. what you need to do is to pick up the results of the liquidity ratios, and then you would comment on the business liquidity. All right, if it is profitability, pick up the profitability ratios and the result from that and make your assessment and make your recommendation. So that is it for the preparation of accounts for sole trader and the analysis of that business, the sole trader business. Number 7, accounting for limited liability companies, cooperatives, and non-profit orientation. And like it or not, this is a big topic right there. So we're going to scroll through the syllabus and try to find that area and then comb through. So I know persons don't like this category. We are there, and that is section 9. Section 9 of the syllabus, accounting for limited liabilities company, cooperatives, and non-profit oriented organization, right? Not-for-profit organization. So the first one there, identify the essential features of limited liability companies. You would need to know what the term limited liability means, unlimited liability, those can come up in the question. The features of the cooperatives and that of the non-profit business, and identify the types of limited liability companies, cooperatives, and non-profit organizations. So like, for example, the cooperatives, you have examples like your credit union, while for the non-profit oriented organizations, we're talking about those businesses that operate with the intention of not making a profit. They're service-oriented organizations. So like your charity, right? Your churches, your clubs, like your football clubs, etc. So those are some examples of the not-for-profit organization. Number 3, outline the advantages and disadvantages of limited liability company. Number 4, describe the various methods of raising capital available to limited liabilities company and cooperatives. Now, in terms of raising capital for the company, the business can sell shares, and those shares, the amount generated from that would form the equity of the business. When we talk about equity, we're looking at the capital. So you have 2 types of shares. You have the preference shares and you have ordinary shares. So you need to know the difference between these 2 as well, right? You have the debt such as debentures. So when we talk about debt, when you go in exam, it's the term debentures. Debentures is a long-term liability, right? And the bank loan is also long-term liability. Your shareholders' equity, you have to know how to identify these, the elements of shareholders' equity. Share capital is a part of that, comprises that. Your reserves, so things like your foreign exchange reserve, your fixed asset reserve, your retained earnings. Don't forget that the retained earnings coming from the appropriation is then transferred to your shareholders' equity section of the balance sheet. Identify the various types of shares and the rights of the owners of each type of shares. You need to ensure that you zero in on that. As I said, you don't know where the questions will be coming from, so just get yourself prepared. You need to know to prepare journal entries to record the issue of shares and debentures, right? So when you issue shares, that cause an increase in the share capital. And we know that when capital increase, going right back to the double entry rule, when your capital increases, you make a credit entry, right? So therefore, the journal entry would be to credit your share capital, whether it is ordinary share or preference shares, and then you would debit whether it is bank or cash, depending on what method you receive the payment in. Debentures, if there's an issue of debentures, it means that the business acquire this loan, then this long-term liability, the business acquires it. So therefore, that's an increase in the liability. And that would be an increase in the debentures, basically. When your liabilities increase, that's a credit entry. So you would credit your debenture and you debit whether you're bank or cash. So you need to know the journal entries to record those. And if it is that there is a redemption of the debenture, it means that the business would have paid off a part of what is owing for the debenture. So that is a reduction in it. And once your liability, which is the debenture we're talking about, decreases, then of course you make a debit entry to the debenture account and credit your bank or cash, whatever method you use to pay for that debenture, to clear off that part of the debenture. So once it's a redemption, it means that you're paying up a part of the long-term liability that is owing. Number 7, calculate dividend payments for various types of shares. And remember, there are 2 types that are focused on, and they're ordinary shares and preference shares. When you move further, you would understand that ordinary shares is the same thing as common stock. So these persons, the persons that purchase shares within the business, they now become owners, part owners of the business. And therefore, it means that they're looking for a return from the amount that they have invested in the business. And that return is referred to as the dividend. Okay, so you need to know to calculate that, because you'll have to show the amount of dividend to be paid out of the retained profit that is in the business to your shareholders. You have to know to calculate that. Appropriate profits between dividends and revenues. And we're going to move on to 9, prepare final accounts of limited liability companies and cooperatives. So in doing the company accounts, you prepare what is called a trading profit and loss account, and then you will be required to do an appropriation section. The appropriation section is what makes the difference between the sole trader business and the company. The only thing that you have to look for when you're doing like the listing your expense part of your profit and loss account, you're looking at debenture interest, which is basically loan interest. And once you have an interest on that, that's an expense to the business, right? And directors' remuneration. Remuneration means pay, salary. So the directors that are running the business for the period, they're looking, you have to reward them. So definitely the director remuneration is basically a salary that is paid out to your directors. So you have to know to treat that. Remember, those 2, your debenture interest and your director's remuneration, those form a part of your expenses. But you will have to do the appropriation section, and you need to know the items that are in the appropriation. Like if you have to pay corporation tax, that's going to reduce the profit that is there. And then you have to pay out dividend. You have to put aside money for the different reserves, right? So those things are a part of your income statement for the company, the limited liability company. And they do prepare what is called a balance sheet. The balance sheet section, the difference come when you're looking at the finance by. So you have to show your share capital section, and you have to show, which is basically your equity, and your what forms a part of the equity as well will be the reserve. So you're looking at your share premium. You're looking at your retained profit coming from the appropriation account. You're looking at the reserves, the other reserves that you put down, which are maybe your fixed asset reserve, your foreign exchange reserve. So those are the things that makes the balance sheet different from the sole trader. Number 10, analyze performance and position using ratio. So we mentioned ratio earlier. It can come out in this section just the same. They need to know your financial analysis ratios for any section basically, because it can come out with your sole trader, it can come with your partnership, it can come with your company, your cooperatives, etc. Now, they did mention accounting for non-profit oriented organizations. Now, prior to the syllabus being amended, you were usually asked to prepare like the bar trading account and prepare income and expenditure account for this business. But guess what? All you need to know for the non-trading organization is how to prepare receipts and payment account for the non-profit oriented organization, not for profit, non-trading organization. Receipts and payment account, I know you say it is something that you're used to. Yes, it's tingling. because you know how to prepare your cash book. Is your cash book knowledge that you're basically transferring right here? Your receipts are debited while your payments are credited, and you just balance off. That's it, right? So your receipts would be those things that would cause that would generate an income for the firm, for the non-trading business. So things like donation would be a part of the receipt. Okay. And that is it for the limited liability company, cooperatives, and the non-trading organization. So let's look at what else is required by the candidates. We're now at number 8, accounting for the entrepreneur. And some sections of this some sections are new to the candidates. Yes, the syllabus was amended, but the first time that we're actually seeing question relating to some of those items relating to the entrepreneur is since January 2021. So you can take a look at that past paper. If you don't have that past paper, grab it, because you'll need to go to it so you can get to practice some things that are a part of the entrepreneur accounting. You just see manufacturing account, it is not there on the exam as a major topic, but you need to know it for your multiple choice. So remember, those topics that are not on the list of major topics for paper 2, you need to know them for your multiple choice. So we're at accounting for the entrepreneur. The first one, list methods of payment to your employees, method of payment for your goods and services, right? Or you can pay your suppliers. And here are some examples: by way of checks, by way of standing orders, direct deposit, electronic transfer. And some of you are very familiar with these things because we're now using technology, and persons do have their banking apps, etc. Instead of going into the bank, you're now doing everything online. You're making bill payments online for your parents or probably for yourself, right? Identify 2 basic source documents of the payroll. So you know, payroll is basically a calculation of the employees' wages or salaries for a particular period. And in preparing the payroll, you would need to know if the person is being paid wages. So you know, wages, you're paying them based on the job that they have done or the time that they have worked for. So you would need to get the use of, you have to use time cards where person enter when they come, they sign in when they reach at work, they sign out, and they can use that to generate the hours worked for the period. Time books work just the same as the time cards. Electronic clocking cards, so some person move away from the manual system and start to use the technology. So some persons, when they get to work, the same card that is used to open like the door, etc., can be the very same card that they use to sign in, right? So you go to the sign-in area and you just swipe, and it automatically enters the time that you reach work, basically. When you're going for lunch, you'll have to sign out, and they call it clock in and clock out in some places. And when you're back from lunch, you clock in. And when you leave work in the evening or the afternoon, whatever time of day it is, you clock out by swiping that particular card. Employee earnings record, so they might have to look at your previous earnings record in order to calculate what you should get for this period based on the rate per hour, etc., which deductions you have to come out and those things. So they would have to look at your employees' earnings record. Number 3, prepare a spreadsheet to arrive at net pay amounts after deduction. And you're seeing the term there, deductions. There are 2 types of deductions. Basically, you have statutory deduction and you have non-statutory, which are the voluntary ones. The statutory ones, you have to pay them. It is stipulated by law that you have to pay those taxes. So like taxes like your NIS, some places call it superannuation, your pension, your education tax. So those taxes are compulsory taxes. And you have the voluntary ones. So things like if you're paying your mortgage, If you took out a loan, you can instruct your employer to make that payment on your behalf, because some organizations, for you to access those loans, you would have to have deductions coming from your organization, right? So salary deduction, they call that. So you need to know those things. Calculate employees' earnings. Gross pay is basically your pay before any deductions, and your net pay is your pay after deductions. Calculating overtime from employees' records. So you know, some persons in some organization, there's a benefit that if you work extra hours, you're paid overtime. And some persons try to benefit from that, because yes, sometimes the pay is minimal and you want to make it up. You want to make best use of the amount that you receive, because yes, the expenses out there are relatively high, etc. So some person do overtime. All right. And for overtime, some organizations pay time and a half. You might find that overtime comes with even working holidays. So some organizations pay differently when you work on public holidays. So what they tend to do is to make it attractive. So you get either time and a half your regular pay per hour. So if you were receiving $10 per hour, if it is that time and a half, you know that you're receiving that $10 plus half of that 10, which would be $15 per hour. If it is double the amount, then of course, instead of receiving $10, you'll be getting $20 per hour, etc. Some places, depending on where, you might end up getting triple, right? And if an employee is getting triple the amount of their basic pay per hour, then it means that who is not going to try to benefit from that? Calculation of statutory deductions, you need to know to calculate those. So it will tell you, like the question based for payroll, don't worry too much about payroll. You just need to know how to do it, because payroll will tell you 2.5% of gross pay must go to NIS. 3% of your gross pay will go to your pension, etc. So it's telling you what to do. Or it may say income tax is 5% after deducting your NIS, your pension, whatever it is. So basically you're given instructions on what to do. And usually if you're to complete that payroll spreadsheet, you're presented with that spreadsheet. So all you would need to do is to complete it, other than where you have to do your calculations. And when I mention calculations too, ensure that you show your workings. And you may not know, but I'm going to advise you, you're doing payroll. If the question does not tell you that you are to round off, please do not round off. We're working with dollars and cents. It means that you need to have 2 decimal places. Some persons, if you miss them by $1, they're going to say you're short them, their pay is short. So no one wants to lose that. So ensure that when you're doing your calculation, it is done accurately. Some organizations use electronic accounting. So therefore, once you just plug in the hours that the person work and whatever deduction and etc., then it automatically calculates it. But you know, you're doing manual examination. You're not being tested on an electronic system in order to plug in and get the results. So therefore, you have to know exactly how to calculate it. Prepare cash flow projections within a 6-month period. And this is new on the syllabus. As I said earlier, for this, you can see this year's January paper, so January 2021 paper. If you don't have a copy of it, get a copy, right? What else you can use as your resource? You can use the Frank Wood Principles of Accounts for the Caribbean by Sheila Robinson and Frank Wood. And that is the 6th edition. The 6th edition has examples and instruction in how you can do the cash flow projection. Cash flow it's nothing that is difficult, because it's not like you're going higher level of preparing cash flow statements. In like your Unit 1 course, it will be way different. For this one, all you're doing is matching for this cash flow, all you're doing is matching your inflows against your outflows. What will bring in some funding in the business? And you're doing a projection. So what will bring in some funds in the business? What will release funds out of the business? So things like your sales, your owner's equity, your cash, your grants, surplus of cash or profit. So those things are inflows, while your outflows are like your overheads, basically the expenses that the business will incur over the period. But what you need to know though is that at the end of doing the cash flow for a particular period, you're going to, and they're doing it for each month, basically. So like for January, at the end of January, you would have a bank balance or cash balance. That balance is then transferred to the next one. So if you have an incorrect figure for this one, then you're going to transfer the incorrect figure to the next one. But the beauty about it is that in exam, they give you something that is called own figure. So they would mark you down for the first year's calculation, but once you follow through with that very same incorrect figure that you used in the previous one, you'll be marked for the concept. So you get something that is called own figure, right? So that is basically it for the cash flows. Remember, it's matching your inflows against your outflows. And there's a step-by-step guide in preparing that. You can find that in the Frank code. And again, remember, there is an example. There's a question that can be used because that's the first time we're seeing cash flow on the exam, and that was January 2021. So get a hold of that paper, as I said. So that is it for cash flow. And the other thing is number 8, prepare sales and production budgets for a 3-month period. Again, this is on the January 2021 paper. Get a hold of that. Again, if you can use the Frank code as reference material as well in order to know how to do this. And your syllabus, this very same syllabus, if you go to the specimen, I believe there is a sample question that was used there, and the response is also in the specimen. So you can get there. So you would have 2. You would have the January question, the January 2021 question, as well as the question from the specimen section of the syllabus. Number 9, use accounting knowledge and skills to prepare a simple business plan. For this, there's a question relating to business plan in the specimen, but it's something simple that they ask you for. So it's nothing too grand, right? It's saying preparation of simple business plan for a small project. For example, like rearing of chickens, farming cash crops, doing craft, making jewelry, etc. Right? So they might ask you to do like a business plan for that. And you're seeing the asterisk, you need to practice in writing business plan. But once you know what should be under which category, then you're able to do that. Again, you can use the Frank code business book, Principles of Accounts, for the Caribbean book, and you'll see the different sections. What are the requirements for those little sections in the business plan? It's nothing grand, as I said, for the business plan. So your budget, your sales budget, your simple business plan, the cash flow statements, remember, use the Frank code as a guide in doing that. For the cash flow and the budget, remember, you can see January 2021 paper for an example question. And for budget, you can go to the specimen to get an example of the budget as well, how to prepare sales budget, because there's a question there along with the response. And we're now at number 9, accounting for partnerships. Accounting for partnerships. And we're going to take a look at that. So here we are, accounting for partnerships. And the first thing there, define a partnership business, right? So you need to know how to compare a partnership with a sole trader business and a corporation. So you need to know how to compare those businesses. What is the difference between a sole trader and a partnership business? Why would someone convert from being a sole trader into being a part of running a business together with 2 to 20 persons, right? So you should know the difference between those or to compare them. State the features of a partnership business. Remember, for the partnership, you have unlimited liability. You have 2 to 20 persons. Profits and losses are shared. So there's a lesson that was done with this, and it is on my channel just the same. So you can view that. You can go there and get some lessons on partnership. Give reasons for establishing partnership. So you're seeing things like increased capital, diverse skills, right? And again, that is in the lesson that was done on partnership on the channel. Outline the essential components of a partnership agreement. And the partnership agreement is basically the partnership deed. And this is what governs the operation of the business. It shows you things like the capital invested by each partner or to be invested by each partner, how profits and losses are to be shared, how much reward should be given on the capital that is invested by the partner. So you're looking at the interest on capital. You're looking at the amount of drawings that each partner can take from the business. And of course, once there is drawings, they might want to put a penalty on that to decrease the amount of money taken from the business or anything, any other assets taken from the business for personal use. And once you put that penalty, you know that is the interest on drawings, and there's a rate in calculating that based on the agreement. And there's a formula for that as well. You can go to the lesson and get in-depth knowledge on that. So that's a lesson on the channel on partnership. Salaries, if any partner is to get in the salary and how much salary. And as I said, this is agreement between or among the partners, the partnership deed. And if there's no partnership deed, you need to know what to do. Like there's no interest on capital, there's no interest to be charged on drawings. Profits and losses must be shared equally, right? And I did a lesson on how to share profits and losses based on what the question asks. If there's no deed, it is shared equally. And if it is that there's a deed, but they don't indicate how to share the profits and losses, then of course, you share that by way of the capital invested by the partner. If you don't know how to calculate those, there's a lesson on that on the channel. So you can up over to partnership and increase your knowledge on preparing partnership accounts, financial statements, and knowing the features, etc. Prepare journal entries and ledger accounts to record the capital of partnerships. And of course, if the partner is coming into the business and the partner brought in X amount as asset, and the asset can be anything. The asset can be cash. The asset can be just a simple motor vehicle. You might just have just the building alone, the premises alone, or the building alone, and you want to be a part of the partnership. And based on the agreement now, they said, all right, so John brought in premises of $1 million. Jones brought in cash of $500,000, etc. So in doing the journal entry, what you would do is show the assets, and you would put those in the debit column because you're debiting those assets account to show that this is what we have in the business, or this is what is invested in the business by the partner. So that's an increase in the asset. And of course, the value of what each partner puts into the business will constitute their capital. So you have to know the journal entry. So the capital will be credited, and whatever asset that is brought into the business by the partner is debited. The capital account of partners, you need to know to prepare those. And you have different types of capital accounts. You have fixed capital and you have fluctuating capital. A fixed capital account, that doesn't change. You just show the capital alone in it. While the fluctuating capital, you would show the current account as a part of the capital account. But the fixed capital, you would do the current account separate and the capital account separate. So you need to know that. Use various methods to share profits and losses among partners. And as I said, I did a lesson on this, and you can go to the channel and look for that. It is called sharing of profits and losses for partnership. Preparation of appropriation account of partnership. And This is where you show how the profit is distributed between or among the partners, what reward they get, so the amount of interest that they receive on capital, the interest that they pay on the drawings, so that would be the penalty on the drawings, and you're showing the partner gets salary. So the salary and interest on capital would decrease the profit that is in the business, while the interest on drawings that is received from the partner would increase the profit. And then after calculating those, you would then proceed to share the profits and losses based on the information given in the question. So you need to know that. Prepare current account of partners. The partner's current account, all you're doing is debiting and crediting, but you need to know the items that cause a reduction in the partner's worth in the business and what causes an increase in the partner's worth in the business. In doing the current account, you pick up the current account balances, and the lesson is on that on the channel, so you can view that. Note that the partner's current account, it can carry either debit or credit, but the normal balance is a credit balance. But if the partner carries a debit balance, it means that the person would have withdrawn more than what he or she has in the business as their worth. So therefore, they would be owing the business. But if it's a credit balance, the business is owing that particular partner that amount that is in the account. Explain the significance of the brought down balances, and I just mentioned those. And number 10, prepare balance sheet of partnership. The treatment of current account balances on the balance sheet. So what you would then, the emphasis though, what this is saying is that the section that would change when you're doing the balance sheet, or basically the difference between the sole trader balance sheet and that of the partnership, is that when you get to the finance by section, it is different. That is where you have the difference, because the only thing that you're doing when you get down to the finance by section of the partnership is that you're showing the partner's capital and you're going to add or minus the current account balance from that, because you're showing the changes in the partner's worth in the business. If it is a debit balance in the current account, you're going to subtract that from the capital account, because it's going to decrease the capital that is in the business for the partner. And if it is that the current account carries a credit balance, it would increase the value of capital. So therefore you would add. And that basically takes us to the end of the topics, the broad topics that are given by the examination body, which is CSEC. So we're just going to check upon starting. Remember, I said that I did in part 1 of this, sections 1 to 4, and we did items 5, 6, 7, 8, and 9 in this part 2. Get going, prepare for your exam, and remember, you still have room to get that grade 1. You still have room to score the highest grade in the exam. But all you have to do is to prepare yourself for the exam. So don't look at these and say, yes, it is broad and you can't bother, whatever it is, you can do it. There's still room for you to prepare yourself for your examinations. Good luck for your CSEC 2021 sitting in the principles of account.
Like, share, and don't forget to subscribe.